And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart, Willis, and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Oh, I'm doing awesome. Now that tax season's over, I'm feeling great.
You're breathing again. Judd, how about you?
Absolutely. Absolutely. I feel like a new man here heading into the rest of the year.
Oh, my gosh. Well, let's talk a little bit about that because obviously we had the extension this year, so that bought a little extra time. So let me ask you, were people waiting until the last minute, Stewart?
Well, you know, it's interesting because what we saw this year is, you know, a lot of people would think that would make things better, and it didn't. Quite honestly, it just dragged on another month of tax season. So, you know, it's been really hard on our staff, and, you know, I want to take this opportunity to thank our staff for really, you know, doing a great job, working long hours during tax season. And, you know, the extra month, we absolutely needed it. We needed it because, quite honestly, you know, we had a couple hundred of additional clients, new clients that came on board, and I don't know that we could have got them done in time with our, you know, current staff. So thank you to the entire tax staff at Asset Preservation. We appreciate you. You put in a lot of hard hours, and we recognize it.
Aw. That was really wonderful, Stewart. So nice that you recognize everyone that works with you because I know it's a very cohesive team. You're obviously the co-founders of the company, but Judd, how many staff members in total? How many employees?
Well, so when it comes to the tax side of things, we've got a CPA that works with us seasonally. Okay. We've got the you know, we're dealing with an enrolled agent who is with us year-round. Okay. And then we have another couple of tax preparers that help out. On top of that, we have 5 full-time administrative staff folks that are with us year-round on the financial side and related to the taxes. Okay. So, again, a lot of people, a lot of hours, a lot of lunches and dinners ordered in. Sure. So we really do, in the end, as big as we've been able to grow. And part of what I'd like to say is, you know, thank you to our existing clients. We've been able to gather a lot of new folks through the TV shows, you know, that Stewart started over a year ago. Yeah. But at the same time, we've got existing clients of ours that have helped build this business along the way, and we appreciate their patience. Again, we're really, in the end, just a family-owned business.
Absolutely. I love that. Well, Stewart, talk to me a little bit about taxes right now. What's going on and what's going to happen in the future?
Well, I think right now we're just seeing a lot of uncertainty. You know, we are coming off a year of record tax planning. You know, last year I think people realized that it could be the last year of some very efficient, you know, environments there. So, you know, this year we're kind of up in the air. You know, we're in a holding pattern from a planning perspective. But, you know, I think what happens is a lot of people, when they do their taxes, they realize that, hey, I'm going to a great CPA or a tax professional, but if you're trying to attempt doing tax planning during the tax season while you're filing, you're completely wasting your time. And I'll tell you why. When I thanked all of our employees at the beginning of the show for the hard work, I appreciate them tremendously. But let me just tell you, you don't want to plan everything while these people are working 10-hour days. You want fresh eyes on your plan. And so that's why we always wait until after tax season, and we start gearing up for November and December when we do our execution of tax plans generally. So it's really important to have a plan. It's really, really, really important to make sure that whatever you do is very cognizant of your tax environment. And one thing I do want to talk about is the environment that we're in. Right now, we are in one of the most efficient tax windows in history. I always say that. And we have a graphic here that shows some tax brackets from what I want to do is first show you a bracket that occurred in 2017. So the first graphic I have here, the red graphic, will show the 2017 married filing jointly federal tax brackets. And that's what they were during Obama, right before Trump created the Trump tax cuts. Now, we're going to go to the next slide, the blue slide here. And what this is showing is the Trump tax cuts. Well, what I've done here is I've also added in a standard deduction, because remember there's a massive increase in standard deduction. We're going to go to the third slide. We're going to overlay them, and now take a look. in almost every situation, taxes are substantially lower than they were under the Obama administration. And I'm not making a political statement here. I think it's really important for people to realize that we are very, very efficient right now. Now, it's very possible, I think people are realizing that taxes are going up. And right now, it's kind of targeted for the wealthier or the higher income folks, but we just don't know yet. We've seen a really high moving target where they said nobody under $400,000 will see a single dollar of tax increase. But then recently, Jen Psaki, the press secretary for President Biden, said, well, that's for couples, not for individuals. So now it basically got cut in half, that threshold. So it's really important to make sure that you understand we're in a changing environment. But I don't know that right now is the time to act from a planning perspective, but it's a staging time right now. You want to have the assets ready to make a decision because as the environment changes, we want to be able to act and be ready for it because everybody knows change is in the air.
Absolutely. Judd, are you hearing a lot of the same questions from clients about taxes changing in future years that Stewart just mentioned?
Yeah, absolutely.
Yeah.
We're in a scenario where people want to know, okay, I've had some great gains in the stock market. I've owned this rental real estate for, a handful of years. And if I'm going to sell, do I do it now? Or do I wait and see what happens with the taxes? And again, without having a complete crystal ball, we do know what the rules are this year. We do know the way things are set up. So with a lot of our clients, we're telling them, again, tax planning is a year-round event. It's not just in the spring when you're doing your taxes. It's not just at the end of December. It's year-round based on current market conditions and also based on, what the tax code is giving us, which there are a number of things coming forward. And typically what I saw this year were people that with the market moving the way it did in 2019 or 2020, they had a spot where they owed a substantial chunk of money that they weren't aware of because they thought their losses were going to offset their gains. But when you look at the full picture and the other income, it was pushing them into certain things like a net investment tax or an AMT, an alternative minimum tax. And again, that's why you need to work with a planner on that side to make you aware of those.
Sure. Well, gentlemen, we're going to play a very special video so people can get to know you on a whole different level. But Stewart, you have a special offer to the viewers at home. Do you want to talk a little bit about that before we play the video?
Absolutely. So if you just give us a call at 833-652-7829, what we'll do is offer you a complimentary portfolio review. And in that review, what we'll do is we'll take a look at any of your underlying fees, any of the risks that you're taking. And in addition to that, what we'll do is we'll take a look at some tax efficiencies that we believe we can help you with as well. Because right now is the time to act. It's very important to make sure you have a plan. All you have to do is give us a call at 833-652-7829, and we'd be glad to take a second look at your portfolio.
Stewart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. As I mentioned, we're going to play a very special video so you can get to know Stewart and Judd on a whole different level. See what they do every day in the office. We'll be right back after this very short commercial break. Don't go anywhere.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning, We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, I love that video showcasing you a day in the life at the office, if you will. And it shows how much compassion you have for each client that comes in. We've always heard that you both have such a great gift when it comes to listening. So right out of the gate, I just have to ask, Stewart, why do a lot of advisors not do this type of planning with clients? What is your take on that?
Well, quite honestly, Cynthia, a lot of them are prohibited from doing any sort of tax planning by their brokerage firms. So a lot of these big box brokerage firms don't even want to go down that route. They don't want the liability of talking about tax. They don't want to even go that. They always say, you always see the disclaimer, go talk to your tax professional. Well, that's precisely why we have a tax staff, to give that kind of advice. And in addition to it, there's a lot of tools out there that basically free up the assets. So here's an example. I had a client that we did some really, and this is very recent, we did some really neat planning. We realized a bunch of taxes on some long-term holds at a 15% capital gain, which was a tremendous discount. So on $1 million portfolio. And, one of the old brokers got back in the house and said, hey, I can't believe you're going to pay, this kind of tax. Well, the problem is that a lot of these advisors really like to put their arms around these assets and not let them go. And understand, if you have these massive tax burdens, no one's ever going to use their money, right? So when somebody knows that if they sell this position, they're going to have to pay a 15% tax. Well, on $1 million, what if it's $1 million gain, right? You're talking about $150,000 in tax. And I know it sounds bad, right? I know it sounds high. But for some people, that actually creates the freedom for you to actually enjoy your money. And a lot of these advisors, when it comes to doing this kind of planning, they just would rather not, because if they know that you feel locked in there, they just get to manage your money longer. And I think at Asset Preservation, we take a much different approach than that. We don't, it's not our money, it's your money, and sometimes people get sticker shock at the tax bills. But what they're not realizing is, was the purpose of this money to save it forever and just show off to your neighbors this big statement? Or was it to actually enjoy it over your lifetime? And for some people, I can tell you they want to enjoy it. They're just so scared. They don't have direction. And they're torn in directions. I had a man in my office the other day. He was our last tax client of the year. We're going through his taxes. It was a very complicated return. And I just said, sir, you must feel so proud of yourself for what you've accomplished. And he broke down in tears. Oh. And he broke down in tears because his wife died a few months earlier. And he said, what's the point? What's the purpose? I was so damn worried about taxes, I never got to enjoy my money. And I think that should be the lesson to you, that, it's like that Shawshank Redemption quote, right? Get busy living or get busy dying. And if you don't have access to your life's work, then what good does it do to put it away?
That's true. Very good point, Stewart. Judd, do you have any other examples of people that you've helped with planning recently?
Yeah, absolutely. And again, there's a lot of different fits that go in there. And as Stewart mentioned, sometimes it's sticker shock that people are dealing with. Yeah. But what we're here to do is, on the front end, educate you. What are your options? What are the upsides, downsides? And then in the end, it's your money, and our goal is to figure out what's the best plan to get you there. Some people, again, just want to take our advice and do everything that we tell them. Some people want to weigh the options, and in the end, even if the numbers say one thing, they choose to go a different direction. I have a doctor who's in one of our Michigan clients, and I think we've mentioned before, we've got an office up there. But this gentleman, he has almost $2 million in a non-retirement account, some big technology stocks in there that have really appreciated, and they generate a pretty sizable amount of dividends each year. The problem is he's 62, he's in a very high tax bracket, and he happens to also have a $700,000 IRA retirement account. So that time bomb is ticking away. When he reaches 72, which is the current required minimum distribution age, he's going to have to start pulling that money out as well. So what we've done is we've sat down, shown him it's going to cost him some taxes, but based on the current tax rates and what's been proposed in future years, we know that it's a much more efficient tax bracket for him. So the plan is going to be to do a big Roth conversion, turn all that IRA money into tax-free Roth. We're going to sell the highly appreciated assets to pay the taxes on that. We're going to then rebuy those holdings inside his Roth account, so the future growth and dividends on that will not be taxable to him or his kids. And then we're going to basically tax efficiently structure the rest of that cash. So, in the beginning when he first came in and we talked about it, the way his eyes lit up was like, there's no way I'm selling this stuff and paying these taxes. But once he really got a chance to look at the analysis and look at the numbers, and he's not a tax client of ours, he's a financial client of ours. So we've run into these situations before where they take our advice, go back and confirm it with their longtime CPA or tax professional, and so far we're batting 100% with them agreeing with the logic of what we're doing.
I love that. Stewart, let me ask you, in case someone in the audience right now is wondering, what's the difference between tax preparation and tax planning?
Right. So tax preparation is just what you do leading up to what's normally April 15th, right? It's just filing your taxes. That's the tax preparation, and that's where it all begins. But honestly, that's where most people leave it. And that's where, they have a 3 or 4 minute conversation with their, accountant or their tax person during this rush of tax season. And they say, oh, maybe you should contribute to an IRA or increase your holdings in your 401k. Or, you get this really kind of short plan. Tax planning, real tax planning looks at everything. And I think right now we know that there's changes, on the horizon here. We know that there's concerns about increases in capital gains, right? Looking at doubling it from 15 or 20% to up to 39.6 or 39.7%. We're looking at estate taxes. If you have, a large estate, currently the estate tax threshold's at $11.7 million. Well, they're looking at reducing that to $3.6 million. So a lot more people are going to be exposed to these super high tax rates. And it's just really important to make sure that if you're dealing with an advisor, that they're also doing tax planning. The concern is that most advisors will say, hey, you know what? If you're going to do this, you should go talk to your CPA. Then your CPA says, hey, you need to go talk to your tax or your financial advisor. And what happens is they never talk, and that conversation never happens, and just years go away. They go by year after year after year after no planning. And I am telling you definitively, this year is the most important year that you can ever plan for. We need to be prepared for what's coming on the horizon. And if you don't do any planning this year, it is your fault, right? I am telling you now, whether it's with us or whether it's with your current advisor, you need to start talking about taxes. And this year is essential. It's crucial to plan with.
Stewart, thank you so much. Judd, thank you so much. I think this is the best time for us to open up the phone lines. Would you agree?
Sure.
Absolutely.
To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. If you have questions about how to properly plan for taxes, please take advantage of calling in today. That number again is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, we're going to have so much more with Stewart and Judd, so please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, talking about such an incredibly important topic, taxes. Nobody likes to think about it, but we all have to. We have to think about it. So I have to ask you a question, Stewart. The tools that are used when you're helping someone plan for taxes, let's dive into that a little bit further. What do you do? How do you help them plan?
Well, there's a couple different things that we do. We do realizing of capital gains, tax harvesting, but we also do Roth conversions. And what I'll touch on is Roth conversions, for example. Now, what Roth conversions are basically when you take your IRA or former 401k and you convert that. You pay the tax now on those deferred taxes, and you pay them now, and all of the future growth that you withdraw is no longer taxable. So the thought behind it is with most 401ks is that, hey, put your money away now. Your taxes will be lower in retirement. Take it out then. But what most people aren't thinking about is generally, as a couple, they have between $1 million and $1.5 million of Social Security benefit over their lifetime. And Social Security was never meant to be taxed. But believe it or not, your 401k and possible pension plans, those are going to make you have to pay taxes in most situations on your Social Security. So if you're not planning out Social Security, not looking at Roth conversions, you're really, really missing the boat here. And I can tell you this definitively, that a lot of advisors don't like to do Roth conversions for a couple reasons. Number one, let's just use this logic here, okay? Pretend an advisor manages $100 million of clients, right? And he says, you know what? I know that all this $100 million I manage of IRAs really should be converted to a Roth. But he also realizes that if he converts all of those to Roth and assume everyone's at a 24% tax bracket, his $100 million block of business just shrank to $76 million. He just gave himself a 24% pay decrease. So a lot of these brokers are really thinking about, hitting their numbers and not necessarily about the future, taxes of the client. And that's why it's really important to make sure you're dealing with a fiduciary. If you're not dealing with a fiduciary, honestly, it's a problem, and you really should consider looking for one.
Because obviously a fiduciary is putting the needs of the client first above anything else.
Absolutely. Yeah. I mean, it's absolutely crucial to make sure you're dealing with a fiduciary, because fiduciaries are really, they have an obligation to put the client's needs first, to not worry about commissions and so forth. So as fiduciaries, we're not allowed to receive commissions from securities transactions. So whenever we make a transaction, you realize that it's our belief that it's in the client's best interest. It's not to benefit us.
Okay. Judd, I have to ask you a question. Let's talk a little bit about capital gains. What are you seeing with that right now?
Well, and again, so that's going to tie hand in hand with the investments and the tax piece.
Okay.
So starting off a little bit with Stewart on the tools that are out there, one of the things that we want to do is sit down with clients and we want to map out the next 15, 25 years. And we're doing that for a variety of reasons. I mean, the number one reason, people don't want to run out of money.
Sure.
So once we've got that piece handled, then it's how much do they want to leave to their legacy? How much do they want to use and enjoy themselves? And then we want to put together a tax efficient manner to do that. And so we're not just looking at the next 3 years or 5 years. We're going to go to when they reach age 72 and have to take their required minimum distributions out. No sense paying less taxes now and then more taxes the rest of your life. And in the case of a married couple, the surviving spouse down the road is going to inherit the larger of the two Social Security benefits, but they still have to take those required minimum distributions. So, those are things that we can't control. Capital gains are something that we can. So as you kind of mentioned there, what we want to look at for people is right now, this year, your taxes, you're going to pay either 0% long-term capital gains, or you're going to pay 15 or 20% based on your overall income. Okay. So the idea is going forward, as Stewart had mentioned earlier, they're talking about doubling what that rate's going to be. So when it comes to those capital gains, if you've owned that asset for a long, long time, the idea is you want to sell it as efficiently as possible. Typically, you're going to pay a lower rate or no rate, depending on your income. Okay. The proposed changes for 2022 and forward is that that's going to be taxed at a higher rate than ordinary income. So that does two things. One, from a tax perspective, it obviously can make a big difference for people and their families and their legacies. But two, if you get enough people needing to get out from under that capital gains bill, which we saw a few weeks ago in the market, they announced that only people earning over $1 million were going to pay this massive capital gains rate. Well, most people say, oh, well, that doesn't matter to me. I don't have a couple $1 million. But if you saw what the markets did that day, when those people start looking at having to sell, whether you've got an IRA, a 401k, all this other money in the market, everybody's going to deal with that when those markets happen and things get pushed down. So it's something that you want to be aware of. And again, a lot of it again comes back to that full picture, the looking at the taxes, looking at the investments, looking at what you're going to leave behind, because it's not just what you make, it's what you actually get to keep and enjoy.
Absolutely. Well, Stewart, we have about a minute and a half left of the show this week. Do you want to tell the viewers one more time what they can expect to receive by calling in?
Absolutely. So if you just call 833-652-7829, what we'll do at Asset Preservation is we are offering a complimentary portfolio review. We'll take a look at your existing portfolio. We'll look at all of the risks, the fees, any tax issues that we're concerned with, and we'll let you know what they are. And the nice thing is that we have convenient locations in the West Valley, Sun City, Surprise area. We have a amazing office over in Tempe, which is where we're filming right now. And we also have our Scottsdale office that's located right there off the 101 in Shea. So they're really convenient spots. We'd be glad to help. All you have to do is give us a call at 833-652-7829. We'd be glad to help.
Stewart, thank you for another amazing show. Judd, thank you so much for another amazing show.
Thank you.
Excuse me, to the viewers at home, I'm getting all choked up. Most importantly, thank you for spending time with us again this week. That number to call is 833-652-7829. If you have any questions about retirement and tax planning, Stewart and Judd have the answers for you. Be safe, be happy, be blessed, and we'll see you back 1 week from today. Thank you.